Nio shares are down 49% over the past 12 months. They have risen from around $13 in May. What's behind the volatility? Nio and other EV stocks suddenly started to sink at the end of 2021, and they have continued being on a downward track ever since. The Chinese lockdowns, which hurt production, haven't helped. This could also mean that there is large potential. Nio is among the most technologically advanced EV makers in the world, delivering class-topping range, innovative battery tech, and plenty of gadgets. It also has a wide range of models on sales. Experts do predict that US has just passed the EV tipping point. What do they mean by that? In the first 3 months of 2022, EV registrations shot up a huge 60%, even as the overall market was down 18%, according to a report by Automotive News. Currently, it's estimated that around 1% of the 250 million cars, SUVs, and light-duty trucks on American roads are electric. Some analysts predict that 25 to 30% of new car sales could be electric by 2030, and then 40 to 45% by 2035. Using the rates for those predictions, Reuters estimates that by 2050, more than half of the vehicles on U.S. roads could be electric vehicles. That means we could be on the verge of an explosion in EV adoption over the coming months and years. Bloomberg predicts that the EV market will grow into a massive $46 trillion industry. Yes, that's right, $46 trillion industry. If this prediction is right, there is going to be an abundance of electric cars sold over the next years. There is a lot of competition out there. Tesla is of course the market leader, but giants like Toyota, Volkswagen, and General Motors are spending billions at new EV strategies. Tesla has come much further than the others. Tesla produced 35,000 electric vehicles in 2014. By 2017, Tesla was producing 100,000 electric vehicles. In 2020, the production of Tesla electric vehicles had a substantial boost with 500,000 produced cars. This year, analysts think that Tesla will produce 1 million cars. If we compare with Volkswagen, they will produce approximately 200,000 units. 60% of all electric vehicles are being sold in China. There are some big Chinese automakers like BYD, SAIC, and Wuling Motors. In China, BYD is selling more electric cars than Tesla. If we also count both electric cars and plug-in hybrid vehicles together, they are actually selling more cars than Tesla worldwide. BYD has just started their expansion to other markets. They are just selling cars in some few countries besides China. BYD is also producing their own batteries, so they have some large competitive advantage in the EV market. Tech companies like Google, Amazon, Apple, and Sony have their own EV projects. Apple started their work with the iCar as early as 2014. According to rumors, the car will not be ready for sale before 2027. How will Nio perform with all this competition? Nio has 4 electric cars, the ES8, the ES6, the crossover EC6, the luxury ET7 sedan, and now the ES7 SUV. Nio delivered 10,677 vehicles in August, up 82% versus the year earlier, and up 6% versus July. That includes some ES8 SUVs, which started deliveries on August 28th. The ET7 sedan, its third new EV this year, will follow on September 30th. Nio has also planned to introduce a cheaper sub-brand, and possibly even cheaper third brand. Nio has major international ambitions. They have started entering the European market, and they are coming to the US by 2024. Check out the video I made about Nio's plans to expand their business to the US. You can find a link in the description to this video. It's obvious Nio cars are among the best in the market, but Nio has some challenges they must solve. Firstly, they must get the production up and running without any lockdown concerns. Their production site in Nio Park could produce about 1 million vehicles every year. The production site is unbelievably large, with 16,950 acres, which is approximately 68 million square meters. That's 12 times the size of Tesla's Vermont plant. Nio expects that 10,000 R&D personnel and 40,000 technical workers will work in Nio Park when they reach their full capacity. So far, they are far from reaching those production numbers. They need to reach full capacity fast to compete with their competitors. Nio is yet to make a profit and is unlikely to do so until 2024. The company has an impressive growth curve. The Shanghai-based firm doubled its revenue in each of the years between 2018 and 2021. 2022 might be different, given the impact of lockdowns, but growth will be enhanced by the opening of its second factory. It could be that this year's disruptions may push back the profitability. Let's look at the price-to-earnings ratio. The PE ratio is a valuation metric that indicates a company's future growth potential by comparing its current market price to its earnings per share. Nio trades with a PE ratio far below its competitors. The stock's ratio is 5.2 versus Tesla's 12.5, Lucid's 131, and Rivian's 38. I think there is more positive signs than negative signs when it comes to Nio. The argument that weighs for me is that big investors in these uncertain times buy stocks. Goldman Sachs, Bailey Gifford, Morgan Stanley are among big investment banks that are bunking up with Nio shares. I also did a video on Goldman Sachs buying Nio stocks, making them the 8th largest shareholders in Nio. You will find a link to the video in the description. Let's sum up. The EV market is going to explode, no doubt in my mind. Nio has great cars, better and also cheaper than a lot of their competitors. Nio sales are increasing. Nio is ramping up their production. Nio is priced low, trading at 17 to 18 US dollars. Nio has lower PE values than their competitors. Big investors have faith in them. I own Nio and Tesla stocks and have great belief that they will someday give me returns on my investments. I will recommend buying Nio stocks now. That was all for now. 7th September is an important day when Nio will release their second quarter numbers. Be sure to subscribe to my channel if you haven't done it yet. I will try to make a video on September 8th with my take on the numbers.